Good day all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Wednesday, the 1st of July, 2020. We're just after about 6:05 p.m. Central Time. I'm going to start off with this recommendation. Try not to trade tomorrow. It's not the smartest thing to go into markets in front of holidays that are a longer holiday weekend. We're not open on Friday. The electronic markets are, but it'll be thinner volume. So keep that in the back of your mind. This is a U.S. holiday, not a national holiday. You'll be affected by Asian markets, European markets still coming back to America tomorrow morning, but you're going to find that I believe it's the grains and the meats close early, maybe some of the softs. Most of the markets will close at their normal time in the financial sector. And then you'll open, and on Friday they're going to close on you at noon in the morning, and then they're going to reopen in some markets Sunday night, with a lot of them reopening Monday morning. So it's always a convoluted idea here. Stock market still strong. The factors of today were, of course, the FOMC minutes. And when you look at those minutes, the big factor to me in them was this. We looked to see if the Fed was doing anything in the yields. Were they going to try to contain them and cap them in some way? Their word is they're studying it. They're very concerned about COVID-19. They think the economy is going to need prolonged, and I want to use that word in a very strong way, help from the Fed to keep interest rates down and stimulus packages going. It could be the Fed, it could be governments. They think this is how it is. So we're going to find out what this all means. You're still not getting a lot of play on the election yet. You know, I keep hearing that people are saying that Biden's way ahead in polls, but you got to understand what polls he's way ahead in. And we have to understand, do you take polls out of bases that are more evenly with Republicans than Democrats? I don't know. So we look at the S&P, and I have not changed my opinion. You're still in a corrective mode. You still have the pattern of lower highs, lower lows. Markets are still going to finish trading on Friday. That's when we'll have an idea on the weekly chart if the market can get back over this all-important high to break that pattern on a high close of 31.6125. That's the number it has to beat. It's a long way off from here. As you can see, it's better than 160 points or so, 157. We're still caught in what I labeled for you weeks ago. This higher high, lower low pattern that's going nowhere. You still have the lower low, the higher high. You're caught in no man's land. I see this as a chop situation. The market today was able to get up and stay over the 18-day average and do it again tonight. So the bias is up, but you don't have a swing line that is in an uptrend. You have a market that is still stuck with Bollinger Bands starting to fall towards them, and I expect them to fall more towards that because I'm not expecting big moves tomorrow, but maybe I'm wrong, because what is tomorrow? Tomorrow's the day that we're going to get the all-important jobless claims. Now, you were probably thinking I was going to say the employment number, how many people are unemployed. No, I think that's secondary. I think primary is we want to see a drop in the jobless claims. If we don't, and they continue to go up because of the COVID resurfacing, then whatever those unemployment numbers are, they get impacted after the fact. If people are applying for more jobless claims and hitting the payrolls more and more with that, I don't think they're working right. They're looking for about a 12.5% unemployment rate tomorrow. When you look at the momentum, it's up. So you have momentum up, bias up, no trend. That's how I view the market. In the NASDAQ, overbought at the upper Bollinger Band. The first time you hit a Bollinger Band, what do I say? I think that's where the pros get out of the market. I think they take money off the table. I'm not saying they get rid of their whole position. I'll let you figure that one out. I know what I say in my written updates, and I don't give you everything I do here. But you've got a lower and low. You got up to that number. I think a big amount of the money was cashed out today, rightly so, in front of the long weekend. In the Dow, we're still in a pattern of a bear trend. Lower highs, lower lows, under the 18-day average. Momentum had been pointing up, and now it's starting to flatten out. This market's still in the bear camp, and no market position in the Russell because you don't have a trend. You got the lower low, higher high. You got a mess of a chart. That's how I'm looking at it. In the VIX, one of the things you look at in the VIX when you're looking at the trade here, and here it comes, is if it's falling, it's normally supportive to stocks. If it's rising, it's normally a detriment to them. You're still in a bear pattern. Lower highs, lower lows, but you're very oversold. You don't need a lot of reason for this market to get a bounce in it, is the point. We'll see what happens. If it continues to fall, 24.46 is the downside target. If it rallies, well, it's got resistance, 29.10 to 58. When we look at the T-bond market, still in an uptrend, but you lost the embedded reading. Now, this is an embedded reading. It's when the two numbers, the K and the D line, the red and the blue, are going sideways over 80 for 3 days or more. When you lose that number, which you did on the close today, it is a sign that the market wants to make a move back to the 18-day average. It's not that far away, and as you can see, you're still above it tonight. You're 178.5. I think the market's going to make a run at 178.12. We'll see if I'm right or wrong. In the notes, same thing. You lost the embedded reading. I think it's going back to the 18-day average, and it'll regroup itself there. And in the dollar index, you fell back. You didn't even continue up. You broke through today at 96.98, this low. So you got a higher high, lower low. This is what I call a pipe. You're sort of stuck in it. You're just whipping back and forth and not able to move out of there just yet. And you're developing the same thing in the eurocurrency. It's got a more bearish pattern in the market. It's still in play. Lower highs, lower low. The key in the market is not to take out yesterday's, which is today's low. Remember, we're already seeing the trade for the next day. We'll see what happens. Any move over 113.07.5 negates the downtrend. Unfortunately, it doesn't begin an uptrend. In the Japanese yen, what would you do if the market's like this? This is Tuesday. Here's today's action. The way I went to teach you, if you hit the Bollinger Band, you're supposed to come out of the market. Take a chunk out, move a stop. I think you would have been stopped out too of that. But you hit the number, you turn, just like that in an oversold condition. Bitcoin. I'm reading about this, and traders are going, Bitcoin's in a funk, the millennials aren't buying it. It's one of the stories I read today. I laugh at it all the time. It's basically sideways action right now, no trend at work, oversold market. That's how I'll view it. Then we get to the Brent WTI crude, and the differential gained today in favor of the Brent. We saw today that in the, and I'll get to that in a minute. Let me finish this up, then I'll get you what WTI numbers were, the EIAs. We had higher lows, higher highs, still in an uptrend in the market. Can you get up to the upper Bollinger Band? Well, if you do get up to it at 43.42, I look for aggressive profit taking. You're in that pipe again. Whenever you go sideways in those Bollinger Bands, they narrow in. In the WTI crude, we saw about a 6 million barrel net decline, which is much more in line with the API number of yesterday. And yet the market was up today all of 58 cents, not too much. The trend remains up. I'm looking for solid resistance, 41.21. And, I'm not seeing a trend. I've got a lower and low, high. Well, actually in this market, hold on, we have the uptrend. I'm still seeing it. And the question is, if it takes out 37.60, it's broken. Still have that target, but do I like these markets? I hate markets when they go into those, what I'll call that pipe, because you rarely follow through one way or the other. Silver was a great example today. In the Rebob gasoline, you're just stuck in the pipe. A lot of markets are in this right now. They will break out. You're going to get trends out of this, so be ready for them. Just when you decide I'm going to take my time off from the market, it's going to do something. But I don't see a setup right here that can develop tomorrow. And in the nat gas, they're looking for about an 80 billion cubic feet addition, which is way less than what we had last week, which I think was 120 if I'm right. So we'll see what happens. The trend is still down. Lower highs, lower lows. It's corrected itself. This market's ripe. We'll see if the market's going to revert back and start down again on it since the trend is down. You lose the trend if you get over 183.10. I look for the pros to be fairly aggressive at 178.20 on the bear side. Now, as you know, I like to offer my course from time to time and give you a chance to buy it at a discount. I've been doing that for my subscribers. And for the next 3 days, you can decide if you want to buy it. I don't care about the time. I just care about the price, what it is. Normally, I sell my course for $179.95. It includes charting software, access, if you don't already have it, to my morning subscriber video. No, if you're a subscriber video and you're going to try to cancel to buy the course, you're not going to get the video. In other words, one doesn't impair the other. I'm already giving the discount on the course, which normally is $179.95. It's going to be $99.95 starting tonight, tomorrow, right up to the 4th, and then we're going to change it to $179.95 again. I don't like to discount it, but I get a lot of people that wait for it. When I do it once or twice a year, and that's really about it. And often after I finish, like it's $179.95, I kick the price up. So my next pricing on the same course is going to go to $199.95. I might even do it as soon as, I'm thinking of it right now as I'm talking to you, maybe I'll do it on the 5th. So I like to do it that way because you can't buy anything like it of that value on the internet. I look all the time. I don't believe that. You get 54 videos, about 6 hours of videos. And here's how I teach. I start with a PowerPoint. I create the PowerPoint so you see how an indicator builds, what it means, how you could do it by hand. Then I take you to charting software. I show you how to set it up on the charting software and how to get it sit on the chart. Third, I teach you how to use it. Now, the data I use is going to be older data. It's the only way you can teach building charts going back in time, real data. I take off the name of the charts often. I don't want you to be influenced by that. I want you to be able to recognize chart patterns, not price, not risk, until you get to money management. That's one of the later segments. So you're first learning, would I be long? Would I be short? Forget money risk. Would I be? Why? What's the filters on it? And that's how it works all through there. By the time it's through, you get the idea that a chart's a chart, be it a stock market chart, a chart on options, I don't care what it is. If you can chart it on real estate, I can show you the indicators that I believe will make sense to you and how you start picking them apart for yourself. Is the trend big? Is it small? Weekly? Monthly trend? I teach you how to work with it all through there, and I think that's the important part for traders. So when I do that, well, the idea is to teach you. So the pricing, as I said, $99.95. That's 30 days access. You do not have to start the charting software the day you buy it or the course. You tell us when you want to begin it. You will finish it in 2 weeks. I give you 30. Now let's assume that your days. Let's assume you need more time. We can make that available. Go to our website. Under education, you'll see it right there. It's your chance to get it, and I'm telling you, now that I thought about it, I'm going to $199.95. I just made up that trading decision. You have a good day. I'm Ira Epstein. Right after this $99.95 runs its 3 days. Take care now.